Hello and welcome to another intrinsic stock analysis video. The purpose of this analysis is to determine the current stock return investment ratio, decide if the stock is under or overvalued, and examine key financial components. Today's pick is Airbnb, ticker symbol ABNB. This company provides a platform for real estate owners and short-time renters to rent a room or the whole house. Airbnb is a worldwide company because in 2022 they have nights and experiences booked in North America, Europe, the Middle East, Africa, Latin America, and Asia Pacific. To perform this analysis, I went over the annual reports and the financial statements for the past 3 years, and I included in this analysis the third quarter report of 2023. So we already know the operation and financial performance in the first 9 months of 2023. In the annual reports, the management is using the nights and experiences booked as a performance metric. In 2022, this metric increased by about 31% compared to the prior year. And when we put the nights and experiences booked in a graph, we conclude that the 2022 level has passed the pre-pandemic level, which is great news, and this metric is growing every year since 2016 with the exception of the pandemic year. Also, in the first 9 months of 2023, this metric increased by 14% compared to the same period in 2022. We should always check the growth of the revenue and net income of any company. The revenue is growing every year except for 2020, and the net income is positive for the first time in 2022. In my opinion, free cash flow is another important financial metric for value investors. In the last 2 years, it's positive and growing. This is great news considering it was negative in 2019 and 2020. Without a positive free cash flow, any company's existence is in question because they are burning cash more than they can generate from their regular and ordinary operations. Checking the total debt, Airbnb has lowered their debt in the last 3 years. In 2022, it's only 12% of the total assets. This means that for every dollar in the assets, 12 cents is funded by the debt. In my opinion, this chart gives me more confidence investing in Airbnb because the risk of insolvency is very low. The outstanding shares graph starts in 2020 because the company became public in that year, so we don't have enough data to figure out the management approach to the outstanding shares. But it's important to mention that in the first 9 months of 2023, the company issued new shares and increased the outstanding shares by about 1%, which is not a deal breaker but something important to know. The dividend policy is stated in the annual report, and Airbnb wants to retain all the earnings, and they are not planning to distribute dividends in the near future. Now let's talk about the return on investment. To find the current return on investment, if we buy the stock at today's market price, first we need to forecast the revenue. I'm using the nights and experiences booked metric to forecast the revenue. In my opinion, 2023 revenue would be around 10.1 billion, and the free cash flow will be 44% of the revenue, which means about 4.4 billion in total free cash flow, or $6.86 free cash flow per share. Using a 5% return on investment ratio, the intrinsic stock price is $137.15, which means that the stock is overvalued by about 7%. If we change the return investment ratio to 4.65%, the intrinsic stock value is almost equal to the market price, which means if you buy the stock today for $147.26 a share, your return on investment will be 4.65%. But I think there are other investment opportunities that yields more than that. So if I buy Airbnb stock, I want at least 7% return on investment, making the target stock price $97.96 or almost $98. In my opinion, every investor should always determine the price that would make sense to invest, and in this case, the price that makes sense to me is $98 a share. Thank you for watching this video to the end, and see you in another analysis video.